Hello, everybody. It is Thursday. This is going to be an interesting one today. You're going to see material you've never seen before, and it's fun. And we spent the last, 18 hours crunching a whole bunch of numbers and going through some stuff and come out with a new multiplier, analyzed, kind of thought for this video today actually came from yesterday's video. And I did promise a cohort analysis. This is it. Who's selling, who's buying, who's exhausted, who's still hungry, who are the new players coming into Bitcoin, how much is left, and what has happened since the Bitcoin halving, and where are we in the cycle compared to other halvings, and what could it mean for the price? And will a new bull run kick off, and the impact of liquidity, and the top and bottom indicator update, which will surprise you. Surprises me all the time. So let's get into it. I want to thank as well American Beijinger, TNT Tesla, Sean Donnelly, the whole gang for being here, K8. I appreciate you all and I hope I can keep track. Renato, who are you, is here too. Let's get into this one. This will be fun if you like Bitcoin or finance. And it's called Multiplier Madness and not financial advice. And shout out to everybody on Patreon as well. This is from Rick. I had my best returns ever thanks to your channel and Patreon group. Woohoo! You've helped me understand asset allocation and how to choose disruptors. It's so simple, but not easy. Well, Rick, you are absolutely right. The concepts may be simple in theory, but applying them consistently is very hard. And that's where people lose their way. That's why we have rules, we have processes, and we have discipline. And I'm glad I could help break things down for you in a way that resonates into real results. Thank you so much. Let's get into the story. Bitcoin news. First of all, let's look at Feb returns. Feb is normally a very good month. It hasn't been so far. Let's try checking on seasonality. So the month of January was up 6.6%. If we compare, if you look at on the left, you'll see the year 2013, 2017, 2021, and 2025. They are the analogs. And basically, January was below average. 6.6% versus an average of 10.5%. Just comparing those years, if you can compare them all, it's a little bit different. Now, Feb should be very strong. If you look at the 2013 return of 64%, 2017, 23%, 2021, 36.4%, we are down at minus 2%. So that sucks. So we have to be positive for Feb. We should be. And if we take an average of those historic returns, the return should be 40%, but that's not going to happen. I don't see Bitcoin going to 138,000 in the next, how many days we have left? 10 days or so. Either way, it should flick positive, and Bitcoin is actually quite strong. As I speak, it's 98,300, and there's stuff going on that explains some of these moves as well. But first, a little bit of interesting news. Bessent is the new head of Treasury. He said, I didn't have gold reserves in mind for the sovereign fund. The US is building a sovereign wealth fund, and they're not going to put gold in it. Shout out to the gold bugs. Sorry about that. But they are going to put Bitcoin in it, apparently. And revaluing gold reserves is not what I had in mind, but that's something that needs to be done, as well as a thorough investigation of what's going on in Fort Knox, what's in there. How much real gold is in there? There's been a bit of a panic of shipping gold from London to New York lately. Don't know what that's about, but there's a new gold in town. It's called Bitcoin, and that's why I make videos. Now, a little bit of other news before we get into the analysis. MicroStrategy, CBO, convertible bond offering. Get familiar with that term. I'll refer to CBOs all the time because 2025 will be a season of at least $18 billion in CBO for MicroStrategy. They're not going to stop. They issue convertible debt at 0% interest. They get free money, and they stick it into hard assets, Bitcoin. That's it. It's simple play. But here, as promised, they always get oversubscribed. I was thinking 2.5, 2.6 billion, but so far it's oversubscribed to the tune of 2.3 billion. That money is coming in. And what Michael Saylor does, he is expert at issuing the convertibles, getting the cash, and turning that almost within 24 hours into Bitcoin. I expect a $21,000 to $23,000 Bitcoin buy on Monday, which will take us to 500,000 Bitcoin. But there's more. Shout out to Bitcoin Menger. And this is people saying, I say Bitcoin Monger, you're mocking Charlie Munger. No, I'm not. Bitcoin Monger is a character on Twitter, for God's sake. So I'm not. I have full respect for Charlie Munger. Anyway, may he rest in peace. But Bitcoin Monger talks about how the level of selling from the long-term holders is looking to be exhausted once again. We got exhausted a bit before, right around November 2024. And then after the big spike north of 100K, December 2024, there was a lot of selling, and a lot of selling early Jan, and now it's done. Then what happens next? The long-term holders stack a bit. That's the green part. And looking at the open-close path since inception, it tends to have more red days than green days during this stage of the bull run. However, the green days are so massive that they've driven the overall price upward. And zooming out to charts like the one below, analyzes the high, medium, and low timeframes and gives us a clue about what might happen next. When the long-term holders stop selling, where do all the other new buyers get their coin? That is the question for today's video. Shout out to JVS, James Van Stratton. He put together this little analysis. I tweaked it ever so slightly, but he basically summed together all the Bitcoin mined since the Bitcoin halving April 20th, which is exactly 360 days ago. MicroStrategy, how much they bought, 264K. ETFs, 331,857,000 Bitcoin. And that's net of the dumpage from Grayscale, which is extreme. Clint, thank you for coming. Miners snacked on 45,478 Bitcoin. Most of that was purchased by a firm called Marathon. Other public companies bought about 6,000 Bitcoin. If you look at the 264,000, which will be actually, that's actually higher now. Well, no, but they're going to be adding another 20,000 to that to be 284 by Monday, I'd say. But compare that to other public companies. The other public companies aren't really moving the needle. They're all very small. And then you've got the short-term holder buy pressure. So the short-term holders are nibbling a little bit, 194,000 Bitcoin. That's us retail investors out there. Then you have off exchanges, the amount that is moved off exchanges, 70,000. Then you've got the long-term holder sell pressure, the 312,000, which is reflected here. Okay, all of the Bitcoin, all of the red and the green, the net is 312,000 out. And as I covered before, there's only a certain amount that long-term holders sell. They only sell a piece of their bag. They hold on to a lot of it. And now we could be getting close to the point where they're not going to sell anymore. Unless, of course, the price goes really high, like 150, 200, etc. Who else do we have on the list here? We got the general miner balance sell pressure, 13,000, because miners have flipped to hodling. So they're not dumping as much anymore. Now, if you look at the amount gobbled up versus the amount mined, you have 3.2x the amount, 3.26x the amount mined has been gobbled up. Where, I hear you ask, so I put this little waterfall chart together to kind of explain how it all works. Hey, Andy. So the Bitcoin mined, you can see here, 137.7. That is a flow into the market, but some of it is eaten up. 264,000 gobbled up on MicroStrategy. That takes us negative. Another 332,000 gobbled up by the ETFs. Takes us more negative. Then another 45,000 Bitcoin was gobbled up by Marathon and a few of the miners buying Bitcoin. And then your public pressure, 6,000, very small amount. And then the buy pressure, the retail short-term holders, 194,000. And then off exchanges disappearing, 70,000. But we have the sell pressure, nets that off, 312,000. Then you have the net amount of the total amount disappeared from the whole system, 449,000. Let's call it 450,000 Bitcoin. Now, the question I ask myself is, when presented with this data, what does this mean? We know the price of Bitcoin at the halving. We know how much has been gobbled up or moved around to different cohorts. We'll get back to that a little bit later. But then I ask the question, okay, let's try to come up with a new multiplier. So first cut, in simple terms, to explain what happened, we had 3.3 times the miner supply eaten, a 3.3 to 1 ratio. For every Bitcoin left floating around post-halving, 3.3 got scooped up. I shouldn't say floating around. That means mined, what I meant to say. by big buyers or hodlers pivoting to ETFs. And that squeeze pushed the price up 57%. This net consumption of Bitcoin, 449,491, pushed up the price 57%. Okay? That was the price at the halving, I think around 63,000, went up to right now 98,500. First explanation. Now, the second explanation of this is getting back to, I like to think in terms of multipliers for where we are. So of the total supply of Bitcoin, 449,491 was taken out of the system, call it 19.8 million Bitcoin approximately. It's a little higher than that now, a little lower, and of course a lot of loss, but just take it as being 2.27% of the supply out of all the Bitcoin was taken. It's a tiny chunk, got gobbled up, but it was enough to spike the price of Bitcoin by 57%. This is the number you need to know. Somebody eats 2.27% of the actual supply, and the price goes up 57%. That's a multiplier from hell, everybody. What happens if a player comes in tomorrow and tries to buy 2.27% in one day or 1 week or 1 month? The price will go up a lot higher than 57%. This is hinting at what I've been talking about for a long time, the potential for a supply crunch. But I hear you calling. I hear you asking. There's another angle to this too. What about OTC desks? The OTC desks, people last week, and I made an OTC desk video, is like, why do you bother talking about that stuff? Because it's so important. Let me explain why, all right? Where did the 449,000 Bitcoin come from? Here we have all of the stuff accounted for, but still, there's a big chunk. 449,000 wasn't created out of thin air. Well, part of it we can explain very clearly, and that is 300,000 of that 449,000 came from the OTC desks. This is the chart with OTC desks. Remember, the OTC desks are designed to give people like Michael Saylor and give people like BlackRock IBIT their coinage without rattling the price. And if you ask people like Samson Mao, they believe the price action is being manufactured, it's been tempered down, so the price doesn't go to the moon, so these players can fill their boots. That's simply how it is. Now, when you take into account the OTC desk balance, the delta between the halving date and today, that's about 300,000 Bitcoin, give or take 8,000. And so netting the OTC desks, we have only 149,000 Bitcoin unaccounted for, but I would say a lot sold and threw it into memes for more alpha post-halving, then lost. We don't know. And there's also another angle to this as well, where there's 149,000 extra Bitcoin that's unaccounted for. Okay, the OTC balance went down 300,000 and 149K is left. I believe it's a combination of things, not only just retail investors getting into other and moving into other things, but also remember PlanB that we covered in the mystery section last week. He transferred his Bitcoin to ETFs. And in the Netherlands, they can do that tax-free. So woohoo to the Dutch people out there. I wish I lived in your country. Anyhow, and I did see this in on-chain data early 2024, before the halving, when I saw the long-term holders move as well. So that's just for security reasons for some people. Anyway, there's another angle too of this, and this is a little bit complex. I'll show you another view of the world that this group put in. Shout out to Chewy as well for sharing. This is the 2024 change in Bitcoin ownership. You can see the funds and ETFs sucked in 519K. The businesses, 374K. The governments dumped 62,000. Shout out to Deutschland. Then the others, 306K, a random bucket. And individuals dumped 525,000. Now that's the whole of 2024. That's not since the halving, which is my analysis here, which is more detailed and more precise. Examples of who these players are: funds and ETFs, it's IBIT, it's Fidelity, etc. Businesses, it's mostly MicroStrategy with some others. And then you have individuals like PlanB, perhaps sold their spot and then they bought IBIT. Maybe, possibly. And it's funny because if you look at the individuals, 525K, to the funds and ETFs, 519K. It's almost the same, ladies and gentlemen. My theory that I had early 2024, that people wanted security of ETFs and not have the headache of self-custody, especially imagine imagine you're an OG from 2012 and you've got 10,000 Bitcoin. Nobody wants to self-custody that type of risk. It's ridiculous. It's like running around in your car and having like $10 million cash sitting in the trunk of your car. Would you feel comfortable parking it on the street? The answer is no. No, you wouldn't. That's exactly why people are moving. So it's uncanny. Sorry for harping on this because it's so important. It's uncanny that the individuals and the funds and ETFs are almost the same, a mirror image of each other, because that's what I think they did, especially before the halving. And of course, some people took profits. Some people bought a farm or a car or a child's education or whatever it could be. But there's another angle too, which is super interesting. It's not just retail, and maybe retail have gone off to memes. We don't know. But this is from Matt as well. He says, there is an absolutely massive disconnect between retail and professional sentiment in crypto right now. Retail sentiment is the worst it's been in years, including bear markets. And it's funny because I see that too. Bitcoin's nearly at $100,000. And you'd swear it's at $12,000. Okay, that's the sentiment right now with retail. I can't put my finger on it, but some people are not prepared for the bear market right now. If there is one, I think it'll be a lot less harsh than the previous ones. But the other part of this is retail sentiment is the worst in years, and professional investors are extraordinarily bullish. It's like living in two completely different, separate worlds, and that's the disconnect between retail and institutions. And I believe a large part of this is down to a simple theory called unit bias. I'm going to go off on a little tangent here and then come back to this story. But unit bias, what is unit bias? I guarantee you, there is nobody here watching my video right now that has one share of Berkshire A Hathaway stock. Current price is $722,996. And you can't buy a fractional. I know there's Berkshire B, etc., but people want the A version. But a retail investor isn't going to go out and just buy a $750,000 share. Okay, this is a mental wall for retail investors. They see one share as unattainable and intimidating. This is unit bias. One day Bitcoin will be up here, but the beauty is you can buy a Satoshi. So when Bitcoin's $1 million, one Satoshi be worth 1 penny. So it's highly divisible, whereas the Berkshire A share is not. Imagine how much you need to sell a call option against this position. 100 times $750,000, which is ridiculous. Anyway, nobody does it. That's unit bias. And that, I think, is a big factor here of why retail is missing to a large part, except for maybe the OGs like PlanB from the space right now. It's simply too expensive. Now, the other players that are coming in, which is fascinating, is endowments for our big universities. And this is a cool chart. Shout out to Sam Callahan, sorry. Apologies, Sam Callahan. This is the elite performance and elite endowments. These are the big American Ivy League universities. Don't hold it against me. But some of the returns they've gotten for the last 20 years on their funds. MIT is the winner, 10.7% average return. Yale, 10.3%. And Princeton, 9.9%. It's interesting. Some of the lower ones as well. But the point of this is there's a firm called Bracebridge Capital. And they manage a huge amount of exposure for two of these top endowment universities, Yale and Princeton, which are the top three performers, along with MIT, for the past 20 years, run by Nancy Zimmerman. She manages money for foundations, pension funds, high net worth individuals, etc. And guess what? Her fund is now 23.6% Bitcoin. Probably in an IBIT form or something like that. The endowments are coming. They're just stepping their toe in the water. Now, from the 13F filings, the other university will see, Nancy, she's a killer. She gets great results. Okay, over the last 20 years, very consistent. And now a quarter of her bag for these universities is Bitcoin. What are the other guys going to do? And the money that these universities have is ridiculous. I don't even know why they charge fees because they have so much in the kitty, as they say. But there's more. It's not just these elite endowments that have billions, maybe even trillions at this stage. I should have shared a slide on that, but I forgot to. Too much to do today. But also private funds are making big allocations, not Bitcoin allocations, big Bitcoin allocations. Brevin Howard, a fund, 1.4 billion. Horizon Kinetics, 1.3 billion. Abu Dhabi Sovereign Wealth Fund, 437 billion. Tudor, that's Paul Tudor Jones, another $500 million too. These are the amount, not the size of their fund, but the amount they've allocated to Bitcoin. Okay, huge amounts. Jericho Capital, another 400 million. Bracebridge, $350 million. Wisconsin Investment Board, $350 million, etc. These are a kind of a spit in the bucket, a tiny sliver of the money runners out there. And these are some of the best in the business. And the others, it'll turn heads. And I do believe 2025 will be where the real allocations come. North of 40 billion into the ETFs, which is going to drive us crazy. Now let's get back to charts and money and where we are with Bitcoin, because there's another angle too. And sorry if I'm ranting on too long, but it's all too important. It's all connected, everybody. So here, this is the updated top and bottom indicators. A few items to point out here. Okay, not only has the Bitcoin price been very resilient in this range-bound area between 93K and 106K for the last 2 months. What is interesting is, first of all, the top and bottom indicator. Here you see it. We're tanking down to yellow. It was orange. And now all of the on-chain indicators, shout out to Alex Rogan too. And it was great to have James Check on the channel last week for Okta. Was it this week? I don't even remember what day of the week it was. Anyhow, he said, if anything, the ETFs make the on-chain metrics even stronger. It doesn't take away from them at all, which actually makes sense. And I love the fact that he supported us on that. So here, the top and bottom indicator has actually gone down, which means the market is less heated. Now, the other angle here, which is crazy, if you look at the green shadow at the back, I overlaid global liquidity. And you can see how it's spiked. If you go back, you see how it rose between 2016 and 2018. And so did the Bitcoin price. And then it was stagnant. Global liquidity, the green shadow, was stagnant between 2018 and 2020. And then it went up again, as did the Bitcoin price with the normal 10-week lag, 12-week lag. But since then, we're talking since April 2022 approximately, global liquidity has tanked hugely in a big way. All the way from about 36, 37, all the way down now to about 29. And that's a big move in global liquidity. That's a lot of fiscal tightening, as it were, more than 35%. But now, so far this year, global liquidity is on the rise again. And Bitcoin has been steady Eddie. What happens when we get back to historic numbers? This is the big story today. We've been in a reduction of global liquidity ever since April 2022, and now it's turning up. And if the macro experts are correct, and they expect liquidity to rise and go completely bonkers because the world is built on debt, Bitcoin has a long way to go. Okay? Hard to explain that chart, but I hope I did the best I could. Bitcoin has been strong, where global liquidity has tanked. Okay? What happens next is insane. And to back me up on my theory, we have Carl Menger. Shout out to Carl. He believes this is the true beginning of the Bitcoin bull run because he sees a cross happening on global liquidity. And I assume the cross is the 200-day moving average versus the actual global liquidity chart. It's about to give us a golden cross. And it has done that previously. It did it in 2016. It did it in 2017. It did it in 2020, driven by C19. It took us to the moon. and also took us to debasement hell as well. So it's a double-edged sword. But the point is, this new cross is coming again, and he believes it'll kick off into high gear. And this will kick us into that green box for the next Bitcoin bull run, ladies and gentlemen. The charts don't lie. The numbers don't lie. The data doesn't lie. All the answers are there, and I've shared tons of numbers so far. But the final thing is this. Let's compare cycles. Let's get a feel for where we are in this cycle. And this is the days since market cycle peak chart that I pulled. And we are now 305, 306 days into the cycle, depending how you measure it. JVS says 306. My chart here says 305. Give or take 24 hours. Who cares? But comparing cycles here. Now, Era 1 is Epoch 1, which is the first true Bitcoin cycle, in blue. Era 2, orange, which is the second epoch. Era 3 is green, the third epoch, era, whatever you want to call it. And now we're in red, Era 4. Off the bottom, actually, no, since halving, sorry, we've gone up 6.13. No, since the bottom, up 6.13x. A lot of people say Era 4 is very similar to Era 2, which is interesting because Era 3 ran faster than Era 2. So basically the green line went up higher. Off the bottom, it went up 17.71x within 305 days of the halving. And where are we now? We should see. Yeah. And the question, and this is from the BitPo team charts, BTC, put the model together. If we look at the blue era, that's way back when. It would be 34x at this stage. And the orange, 10.77x. But what I'm most interested in, though, is not this, is where we go next and where the top is and how far out the top is if history repeats. And it's not necessarily repeating all the time. So this is the top estimator, days since market cycle peak, etc. And comparing these cycles here, all right, if we apply Era 2's pattern to Era 4, to refresh you on that, Era 2 is orange, Era 4 is what we're in today. Some people believe it's the same. If that is the same, and Era 2 peaked at 115.5x from its cycle low, if Era 4, what we're in right now, mirrors that, the price would be so high, I won't even mention it. It'll be about, 2.3 million per Bitcoin. So no, I want people to see my face here. I'm not slinging hopium. I'm saying if the pattern repeats from the second era, which it's not going to, okay? We're getting diminishing returns. We'll make that very clear. But it is interesting to see how long we have left to go if the cycles do repeat. Now, if Era 4 mirrors Era 3, and it's more muted, it's a 20x, be it 800% return, which will take us to approximately $400,000. But remember, Era 3 was a manipulated cycle where bad actors, bad players tried to suppress the price of Bitcoin. Maybe like TradFi, according to Samson Mao, is doing today as well. We don't know. But the point is, Bitcoin is harder. We don't know how high we're going to go. But what we do know is we have 220 days left. If history repeats, which is like 3/4 of a year. So we've got lots of time on the board to make things happen. So Bitcoin is complex, but I'm trying to dumb it all down and find patterns in numbers and charts to see where we're going to go next. A lot of people think the bull market's over. I do not. Not by any stretch. Bitcoin is at 98,300 as I speak. And I'm going to finish all of that with, shout out to Carl again, his meme of the day, which I try and finish on a happy note. Basically, you now watering a little tiny piece of Bitcoin, and the future, your descendants will be able to pluck it from the tree and it'll be worth an awful lot more. Like going from a little seedling into a big oak tree. And that's the story, everybody. Hope people can relate to that. The future's bright. A lot of talk about $1 million Bitcoin and way higher. It's scarce. The money's coming. The money's coming from just a tiny sliver of funds from thousands around the world. 11 have allocated a sizable amount of cash. And then the university endowments are coming too. And the sovereign wealth funds, and the pension funds, and the SBRs. And the long-term holders are done selling pretty much. For now. We'll see. So I hope you like the story. Hit the like if you do. A lot of work goes into these videos. And thank you to the team that makes them all happen every single day. And thank you to all for coming and make it happening too. This will be the Bitcoin only playlist up here if you just like Bitcoin stuff. And Bitcoin is enough to keep me fascinated for my entire life. But I have to cover all assets as well. All the good ones too. So thank you all for coming. Thank you for amplifying your intelligence. Hope you like the show. Thank you, American Beijing'er and T&D Tesla, and Sean Donnelly, and K8, and everybody for coming. Appreciate you all. Have a good night, ladies and gentlemen. Bye-bye.